Hello, hello. It's Peace Love Music here with Crypto Landy, and we're going to learn some TA today. How are you today, Landy?
I'm doing well, Peace. Thanks for having me back again. This is our third episode of Learn TA with Landy. Today is Volatility Day. We're going to be talking about the dispersion of returns. We're going to talk about what dispersion of returns is. We're also going to be talking about a few ways in which we can measure volatility and kind of weave that into our previous sessions where we talked about, in the first one, trend. Kind of candlesticks, what they are, what they represent in terms of the live auction that we see on our charts, and then extrapolating that to a trend, uptrend, downtrend, sideways, so on and so forth, and then support and resistance. And kind of the biggest piece after that, or that needs to be considered when evaluating all of that kind of equally, is volatility. And of course, we're going to finish up with the last concept in our next episode, which is momentum, which kind of incorporates trend, support and resistance, and volatility to give us, a gauge for momentum, either to the upside, downside, or even sideways in some cases. So, we've got a little bit ahead of us in terms of learning today. And then the cool part is after we kind of put all these concepts together, we'll continue the conversation with, practicing putting all those concepts together. And that is, I think, going to be the most fun part for me and maybe even the audience, because that's where we kind of wrap all these concepts up, make them actionable in terms of learning how to actually break down price action and start formulating trading plans based off of our technical analysis. We'll even start throwing in some fundamental analysis. Now, that is going to be a little bit different because there's many different ways in which to perform fundamental analysis, but I'll give everybody the basics. We'll even get into things like understanding liquidity pools and automated market making systems and the differences and how, the similarities and differences for how DEXs and centralized exchanges are funded with those liquidity pools, all kinds of cool stuff. So I'm really looking forward to this, and I hope that everyone else is too. I am in the background. I'm stretching right now, by the way, because in the background I'm sharing out our stream right now. So you'll have to forgive me as I kind of babble on for just a moment here. But how are you doing this morning, Peace? You doing well?
I'm doing well, man. I really love, I get to spend, it's a lot of work what we're doing here with DeOrganized, and I don't want to underscore that, or I don't want to dismiss that part of it. But I love what I'm doing, and I get to hang out, yesterday morning I get to hang out with Haddy and Staxy, and then we had the Whatever Monday space, and I chatting with all my friends there. And then I got Haddy and GPSC this morning, and then I got Mike Blockface and his crew, and Stu came on, and GPSC was with us today, and then some new guys. We got Dan, and you probably met Vibes in that group, and who else was there with us? I think that might have been it, the six of us. But it's just and now I'm here hanging out with you. So it is work. And there's a lot to it. There's a lot of effort into getting this all, making this all run, but it's really enjoyable. I get to hang out with some really cool people and chat with cool people on a regular basis. So I'm doing well, man.
Awesome. Yeah. And this is kind of one of the shows in which you don't really have to do too much. Landy can talk his way through the entire thing, right?
I'm really more of just a guest here. Once I get it running.
Well, I obviously, I'm really happy that you've been so gracious as to host me here. And I think that this is something that as we continue on, not only are you learning, a little bit about TA coming into this already, right? But that gives you a chance to ask questions, right?
Yeah.
And the audience here, Well, I see people kind of still filtering in to the stream here. Please, for those that are coming into the stream right now, go ahead and share this out there. We are on the 3rd episode. These are recorded, and I believe they're posted to YouTube now, right? You just created the DeOrganized YouTube account?
YouTube account exists. We just started kind of utilizing it a little bit more, but it really has been. So we created the account when we first started doing these broadcasts. So everything streams there. So that's there once we broadcast everything. But we were starting to do a little bit more curating it and doing stuff with it and trying to get subscribers and stuff. So it's like yes. So they can go to YouTube right now. It's DeOrganized Media on YouTube, and see all of our shows, including this one, the episodes of Landy's Learn TA with Landy.
Awesome. Well, for those that are in, I believe the feed that we pull in for the public chat, is that X and YouTube?
It's actually, so we stream it's on X and YouTube and Twitch and Facebook. And so some of our interactions are different because they're with different.
Okay.
So Restream we are streaming across multiple X channels, multiple Facebook channels, multiple YouTube channels right now with Bitcoin Live, DeOrganized, my channel, some other, like my personal channel. We now have DeOrganized on Facebook, DeOrganized on YouTube, and all that stuff. So
Okay. All right. So I see it. Yeah. Okay. Because it's up across DeOrganized Media, Peace Love Music, Bitcoin Live. Awesome. And then of course all of the other platforms. So for those of you in the audience, if you do have questions, I mean, it pulls in your chat, so we can address those questions as we kind of go on here. I did want to see, Peace, if you can, if that shared window for the price action is available to you. I did share it out a little while ago. There it is. Perfect.
Caption that.
All right. Now, today, as I mentioned earlier, we've talked about support, or the last episode was support and resistance and volatility. And just to kind of recap for everybody here, the way that I explain technical analysis after many, many years of doing it, there's many different schools of technical analysis, but at their very core, all of the different ways in which you can chart and all of the different methods of TA are at their core based on our trend, our support and resistance, volatility, and momentum. So that's one of the reasons why I kind of teach things the way that I do and why I chart the way that I do, because you can extrapolate that out into various systems. Your Gann, your Elliott wave, your simple support and resistance, and so many others, like different schematics, and you can kind of match up that. While there's different methodologies and some people like patterns and like all that stuff, but at its core, it's trend, support and resistance, volatility, momentum, no matter where you go. It's just a matter of advancing into a system if you'd like, or keeping just what I teach and kind of just doing the simple stuff, because the simple stuff you'll often find works the best in markets. And we do account for many of the things in our basics that are going to be included in all of those other systems. Now, for volatility, it's very, very important to understand kind of what volatility is. This is often overlooked when people are trading. Most new traders, they get enticed into watching YouTube videos about these different trading setups and how you can make 1,000x, or this is 99% accurate or something like that. And they basically bait and switch you with very, very specific criteria that they're back testing for. And they often resort to momentum based stuff and ignoring trend, support and resistance, volatility, or maybe only taking portions of those and then, focusing on momentum. And while momentum trading can be something that you can do and you can use as your metric for trades, you need to understand kind of the first three pillars of trend, support, and resistance and volatility to understand, what you're looking at with momentum and what the possibilities are. You'll note that I use a Bollinger Band set here. Now, John Bollinger created the Bollinger Bands, a Bollinger Band width and Bollinger Band percentage or percentile to kind of gauge volatility, essentially. And Bollinger Bands utilize a basis band. Typically, it's a 20-period moving average. So what we're doing with a 20-period moving average is we are taking and in a simple moving average, just we're looking at what we had first talked about with candlesticks and your open, your high, your low, and the close. So OHLC, or open, low, high, close, depending on who you talk to. By the way, that can be a little different. But in this case, we have my indicator that I've shown off before, where we have a basis for BBWP. We have our moving averages, we have Bollinger Bands and all that kind of stuff. So what I'm focusing on here is simply the Bollinger Bands. Now, typically Bollinger Bands are going to be 2 standard deviations to the upside and downside of the 20 simple. Now, we're not going to get into the math or the standard deviation calculations away from the 20 simple because we want to just get to the core. This is something maybe extra that we could get into some other time, which is the actual calculations and the kind of the behind the scenes stuff. I think that's a little bit too much to get into for something like introing volatility. So what we're going to talk about here is the dispersion of returns and what that is. And the dispersion of returns typically is measured as like a basket of assets, and you'll hear like, well, the dispersion of returns is kind of measuring or just using statistics to measure these assets against each other, which is giving us kind of a standard deviation or variance or range of percentage of returns to the upside or downside across an asset. We're talking about dispersion of returns when looking at a single asset like Bitcoin. What we're really talking about is volatility and volatility within a range. So when we talked about candlesticks and kind of that that open, high, low, close, what we're really doing is we're trying to gauge what we are seeing in terms of when a candle does hit its open or have its open, its high, its low, and its close. What is the range in which it played in? And that's kind of giving us a metric for gauging volatility. So we're talking about dispersion of returns. You can say that, yesterday, the dispersion of returns was across a 6.53% range, right? Now, that is technically giving us a little bit of data for volatility. Now, this is a very simple way of explaining this because dispersion of returns can be open to interpretation depending on how you want to use it versus a basket of assets or assets within a portfolio versus the single asset. For our purposes here,
what would be the opposite of the dispersion of returns?
Well, I mean, the opposite of dispersion of returns. I don't think that you can really have an opposite of it because you're always going to get some dispersion of returns. You're always going to get some sort of movement, or you have a dead asset, right?
Okay.
So you're going to have some kind of an open, and you're going to have some kind of a close, and it's either going to be higher, right? The close is either going to be higher than the open, which results in green candles, or the which is, if you were in a long position, your dispersion of returns is going to be big if you were able to nail the top of like this candle right here. But it's really just a metric for gauging kind of volatility over a set period of time. Typically, dispersion of returns, you're measuring over a set period of time as well for an asset to kind of gauge how much does it move? What is the percentage that it moves over time to give us a quantifiable range of returns, or how volatile or how non-volatile is the asset. So it's less of like what's the opposite of dispersion of returns and more of what do we have that the data is telling us. It's telling us how volatile it is,
yeah,
or how non-volatile it is.
How much of a dispersion there is.
Yeah.
It's either there's not much or there is, more
Yes.
or less.
So, and that's like with the red candles or our bearish candles, we have like a 6.53% drop in price. That is calculated in with our dispersion of returns, which is helping us measure how volatile things are over a set period of time that we define. It is open to us to define and redefine. Here, I'm defining it using a set of Bollinger Bands that uses the 20 simple and 1, 2, and 3 standard deviations to the upside and downside away from that 20 simple. Now, we're going to get a little bit into the weeds when kind of measuring that stuff. I will explain what Bollinger Bands are, but I wanted to kind of go to the simple, and that is that when you're looking at the difference between the highest and lowest return in a data set, that is your dispersion of returns. And then you extrapolate that out over time. In this case, we're using a 20 simple to kind of gauge that, and then the standard deviations to the upside and downside away. We're not going to get into the math today. Maybe we will do that later. I do encourage people to understand the math behind standard deviations, but it's not needed. It's all calculated for us in most of the indicators that you're going to find. It's more important that you understand how to utilize volatility and how to gauge volatility. And many might be familiar with something called an ATR. This is an ATR, an average true range. And this is doing the same thing. It's measuring how far or how dispersed those returns are over a period of time. When ATR is low, it means that, well, what are we seeing? Like back here, when it was on the lower end, or during this time period when we saw price go sideways, we see, kind of flatlining. We don't see, the actual average true range, which is for those that want to know, is like average true range is basically your current high to current low, and then the absolute value between the two kind of gives you the average of those candles over a set period of time. Just like everything else, we want a data set over not just that candle, which we can get the ATR calculation per candle, which is just taking the high and the low, and then the absolute value, which is the previous close, high and low, and then comparing them, like how much did they move, right? Percentage to the upside, percentage to the downside, or ticks, or price movement in terms of pure price movement, and like where was the average of yesterday versus the average of today for price, and then comparing the difference or the dispersion between the two. And many people in traditional markets use ATR. There's ATR bands, there's ATR sets, and there's different use cases for those. And realistically, that's the most simple way to measure volatility over a period of time. But I choose not to use that because I think that that there is much better ways to get that information presented to everyone. But this will be on the chart down on bottom so that we can kind of compare it to what I'm doing here, because I'm using two different things. I'm using the Bollinger Bands, and then I'm using a volatility metric to tell us, okay, as the dispersion of returns increases, what is the volatility metric that we're trying to gauge how long this could go for, essentially. Trying to get essentially a gauge for how volatile is price within the Bollinger Bands and even outside of them to the upside and the downside. So when looking at the way that I like to use volatility, as I'm a volatility trader, is I like to see when we have a low period of dispersion of returns. And here on the daily, there's a few spots that we can pick out, but I think it might be worth going out to time frame maybe a little bit lower or a little bit higher than the daily, just to kind of illustrate this. So here we've got the weekly, and actually, you know what? You might even just want to go to the monthly because it's very clear when we are in a consolidation period and we have a relatively lower dispersion of returned period. And you can see this by the way that the bands are here. So we've got the 20 simple here on the monthly, right? Now in the 20 simple, when you see Bitcoin trading above the first standard deviation, second standard deviation, even the third standard deviation to the upside, you see volatility is increasing. And we can see this also in our volatility metrics up top here, right? So I haven't introed this particular measurement yet, but we're just looking at the Bollinger Bands purely right now. And you can see with the Bollinger Bands, when volatility increases to the upside, the lower bands expand right off the screen in this case. And then we get to a period where the bands all kind of squish back together. And then we see the upper bands and the lower bands kind of folding in on price action or compressing. So we have an expansion to compression. Now we have a big old range here granted on the monthly, but this was a high volatility period to another high volatility period to the downside. And then we got a bit of lower volatility. Yes, there were spikes of volatility in between where the dispersion of returns was very, very high. But in general, on this particular time frame, we were going from expansion into contraction or expansion into compression. And then we got re-expansion again to the upside here. In this case for Bitcoin, we see that even the downside bands expand right off the screen. We stay in a high volatility environment until we start moving back into a low volatility or get mean reversion, where we have, if we were comparing the lower volatility period to this high volatility period, we went back and basically tested our lower volatility period, and then started to get some dispersion of returns to the downside, some increasing dispersion of returns to the downside. So we went into a compression to expansion, then we went into a compression again. And you can always tell because these bands start to pinch back together here. We went into expansion and we actually went into a recompression here recently on the monthly. So you're going to hear, volatility is always kind of defined as the dispersion of returns, but we want a good way to measure it. And a good way to measure that is lower volatility periods of time, otherwise known as compression, consolidation, so on and so forth. There's many different terms for it. And then we have high volatility, which is expansion or volatility ticking up or, breakouts, either to the upside or downside. It doesn't matter when we're talking about it like that. We're just going from low volatility to high volatility, and there's many ways to describe it. When I'm presenting this in my videos for my technical analysis, I'm presenting it utilizing the Bollinger Bands, and I'm talking about typically compression or consolidation, which refers to, in general, lower volatility periods of time, to expansion. And that's expansion of volatility, expansion of price action. And we get a nice reference when we're using something like Bollinger Bands because we are incorporating a bit of trend, right? Because we're using a moving average, which I haven't talked too much about, but we will, because I don't really use moving averages a lot. I focus on trend. Moving averages are a good tool, but I already use one, and I use standard deviations to the upside and downside that would have confluence with a lot of your typical moving averages that you hear about, which are, what are they doing? The moving averages are measuring price over a set period of time and telling you, what the average is. Like, where is that average price? Well, in this case, we have the 20 simple moving average, which the calculation is fairly simple. It's measuring 20 periods of price action and essentially averaging it's high, low, close in most cases. So it depends on what your settings are for the 20 period simple, but the general calculation will be that. And in this case, what is it usually measuring? It's measuring the high, low, and then the close, and then, kind of where things are. And then over 20 periods, it's slowly moving up with price or down with price here. Now, simple moving averages don't react as quickly as exponential or RMAs. And that's, where we get into moving average stuff that, while it gives you a reference for trend, doesn't tell you too much about volatility unless you are trying to look how far away something is. If it was very far away from like the 20 simple, then we know that the dispersion of returns is increasing to the upside or the downside, right? But we don't get a good gauge for like, where is volatility at? We could use different volatility metrics and bars and like all these different fancy calculations when we've had a really simple one right in front of us this entire time with Bollinger Bands. And just to kind of explain really quickly, so I get the definition of Bollinger Bands out there, You know, we're using a middle band in most cases in a standard set. We're using a basis band, which is typically the 20 period simple moving average. We have what is usually the upper band is the upper second standard deviation, which is 2 deviations away to the upside, away from that moving average, and then 2 standard deviations away to the downside. So you'll usually see an upper second or a lower second, or they're not even labeled. My indicator labels them so that people have a good reference for when I'm talking about the different moving average or the different levels of interest, let's say, and then we can have a price reference for that as well, for the upside and downside. And I've added an upper first and an upper third, a lower first and a lower third to my indicator, just to give us extra information, because we operate in a pretty high volatility environment when looking at something like Bitcoin. And this is where we can see Bitcoin has many different ways in which we can start to measure just visually the volatility periods. And you can see that by how close together the bands are. If they're in like a trending state to the downside here, when we see compression of the bands, prices is over the 20 moving average period is having a consolidation up here. We see that the bands begin to close in on each other or compress. And then we start to get price volatility expansion, in this case to the downside, and we see the bands react and expand as we are now moving down in a pretty volatile way. And then we get a reversal off of that and go into even higher volatility. Why? Because we're referencing 20 days of price previous to each candle to gauge how that dispersion of returns is acting. In this case, we see an uptick in volatility, and then price bounces off of a key level of support and resistance, of course, reverses off of our lower bands here, and then increases volatility back to the upside. So we get this ever increasing volatility expansion to the downside. So we're in a high volatility environment. That also remains true when Bitcoin bounces up. We're still in that high volatility environment and even picking it up further. And then we're referencing that sideways price action here. We see the pinch in the band. So consolidation is being reflected, likely going to resolve soon as we're coming into this and we see the pinch or the compression. And then we get that downside expansion. Then we get what's called mean reversion, or reversion back to the basis band here in this case, or revert back to the mean average over a set period of time, which if you were to average all of this out is, in this case, right around where price started to compress again. We get a nice lower period of volatility and kind of a range being set up. We get a little bit of a compression here as well. Again, we start to get slight expansion to the upside, again, trend to the upside, and then we get some mean reversion. So if you were to average this out over the period of 20 days, where these highs came in, these lows came in, and then these lows came in, well, they're pretty close together in terms of their closes, their highs and their lows, right? This being a slight deviation of that area in terms of volatility. But we start to see a compression to then re-expansion, of course, after breaking out and closing above the all-time highs. We get that beautiful price expansion, or that increase in dispersion of returns over time. And now we can see that Bitcoin is back into a compression state. Now, there's some pretty easy and clear criteria when using Bollinger Bands, especially the set that I have here. When we see metrics for gauging volatility like this, often people get critical and they're like, well, you don't know when it's going to expand or contract. And it's like, well, yes, you can actually see when it's in a contraction or an expansion just by the angle of the bands. And in this case, we have the 20 period moving average, also known as the basis band, is moving up towards price, or price is mean reverting back to it. So price is moving down towards it as it moves up. So we're in a period of mean reversion, and we can see that we might be either setting up for a range, possible re-expansion, and we can actually define the criteria utilizing Bollinger Bands. And it's pretty simple. We see that the basis band is going to be our bias. Above it, we're bullish towards the upper bands, right? Below it, we're bearish towards the lower bands. And any wicks through it, and we are talking on closes. So we can get wicks that kind of land anywhere. Remember, wicks are swings, or wicks are going to be highs or lows. And in this case, not the closes, but the highs or the lows. And they can kind of land anywhere, but as long as we see closes above the basis band, which is that 20 simple, we're biased towards the upper set of bands. If we see price fall through it, or the bands move past price as it goes sideways, then we're biased towards the lower bands, right? So that gives us a little bit of directionality.
That's on a close, on a
On a
wick.
close. On a
Right.
close. So this is all going to be based on a close. Wicks can kind of land anywhere. And in periods of compression, like when we saw this little bit of expansion here to compression, we often do see closes in and around these bands, but that's one of the reasons why I have a lower first, like over here. Typically, they'll line up with support and resistance, so we're looking for confluence. We're going to be wrapping all of these things together here pretty soon, but in this case, if we're above the basis band on closes, then the volatility range is technically the upper first to lower first. If the basis is lost, we're looking down to the lower first. That's a checkpoint. Anywhere below there, we're going to increase volatility to the downside in terms of the lower second, but we're coming off of high volatility. So these areas to the downside typically will act as supports, and these areas to the upside will typically act as resistances. Now, when you're using the Bollinger Band set, the upper second and lower second are kind of the reversal or pivot areas of volatility. And this is, of course, 2 standard deviations to the downside and 2 standard deviations to the upside. But often we will see that price can close outside of the upper second or outside of the lower second, meaning above the upper second or below the lower second. Good example is here, closing above the upper second and even the upper third standard deviation before going sideways. The 20 simple catches up to price as it's going sideways, and Bitcoin loses that upper second and starts to hover above the upper first. The moving average continues up as Bitcoin puts in this high on this local top, and it mean reverts back to the basis as the basis is moving up, but we lose the upper first. Well, what is this telling us? That we had an increase in volatility to the upside, and we can actually measure this. As long as Bitcoin's closing above the upper second, volatility is going to continue, in this case, to increase. And as long as we're above the basis band, it's more than likely going to increase to the upside. And it did. As long as we're above the upper first, we're maintaining this volatility expansion because we were still in an expansive posture here to the upside. And then as soon as we begin to lose that and revert back to our mean, which, by the way, if you were to measure the past 20 days, what do we got? The 11th to when? The 27th or 26th, right? So we're about 14, 15 days in, right? And that does mean, price is kind of mean reverted back to where it was over here, right around the 11th. You'll notice that if I was going to go to kind of the 11th and 12th candle, that is where the basis band is now. So we have the moving average catching up, price is mean reverting back to test this area, and we're getting a compression of the bands. So what does this tell us? When we classically, when you see an asset touch the upper second or lower second, it's going to act as either a reversal point or it will act as a continuation. And that's where we start to incorporate different things here. So off of this compression down here, this is where we're going to tie in some stuff. So we have the little lower low price action here. We got the higher high up here. So we're looking at trend first, right? So back here when Bitcoin was trading around our 66 550, and then it dumped out with some higher low, lower high, lower low price action here, and kind of hit that lower second and reversed because we were coming off of a slight bit of expansion back into compression. As it rejected in and around the mid zone here, it spiked into the lower second and reversed and began to then come back to the upside here. And it excuse my son in the background, he's having some fun. But we needed to
I wish I could, but I couldn't.
He must have found out that he's going to SeaWorld. Or
Nice.
SeaWorld. I had to remember which state I'm in. I've been traveling around a little bit. But yes, so we have this area that needed to be broken to the upside, right? And we saw that Bitcoin was coming into a bit of a range for the bands here. To the downside, if we were to close back below the lower second, we were going to have to, look at this low over here. So the criteria would have been past this low, close below this low. We're going to get expansion to the downside because it would be below the lower second and below the last low. So we'd be getting continuation plus expansion to the next areas of interest to the downside. In this case, to the upside, we could see that when we pass the upper second standard deviation, we need to see closes above it that also get above this high over here, which is the most recent resistance, to get that confirmed expansion to the upside. So when utilizing, our trend, we are in a downtrend. We need to break that downtrend, right? So we need to get a trend break to try and form an uptrend. But we also are looking for, so we have trend and support and resistance, right? We're also looking for expansion because once we get above this high over here, we're looking for expansion to kick off above the upper second or at least above the upper first to show the etchings of it, plus breakout, plus change trend. And so what we got was the higher high started to get a little bit of an increase in its expansion of the Bollinger Bands. And as long as it was above the basis and above the upper first here, we're going to see continued expansion. We went and saw that it came back down in higher low fashion in and around the basis band. So we got a bit of mean reversion. We saw price spike back up towards the upper second standard deviation. We did see reversals off of this area in the upper second because it was kind of a range that was set up and we wanted to see that nice compression. Well, we got another higher low here that was mean reversion back to the basis and even past it, but we're in an uptrend now, right? And in terms of support and resistance, we're above this last high in an uptrend. And, although we did pass this high, the criteria is that we get above the upper second standard deviation as we see this compression end right here. So when we're looking at this particular compression, we have a really easy gauge. We must pass this high, which would put price closing above this high to get continuation to the upside, right? We're in an uptrend. So we need to hold this last low, right? And there's a few different things on the low side here during this compression that we need to be aware of. And this is how Landy interprets price action. And one of the reasons why many are like, oh, you're like calling it to the T. Well, not really. The chart is telling me everything I need to know, right? So we have the high up here. We need to pass that on a close to get continuation. That would also put it above the upper second. And in this case, even above the upper third. So we know that if price closes above this high during this compressive phase, that it's going to kick off extremely high volatility because it's going to be not just 1, 2, or 3 standard deviations. It's going to be 3 standard deviations above just breaking that high. And that will kick off very aggressive expansion to the upside in this case. And to the downside, if we were going to see any closes back below this low, well, that would also be a trend break to the downside, presenting a possible trend reversal setup in terms of our trend. It would also be breaking through a support area that we'd previously found on this high side structure over here and on this low over here, right? So we have 2 areas of confluence there. And we had just also bounced off that area for the 3rd time. So we have that support area. So we would be breaching trend, we would be breaching support, but we wouldn't actually kick off a really aggressive expansion. We would start to see expansion begin to tick up or volatility begin to tick up on closes below this lower first here. So you can see that gray line is the lower first. But what we would need to see in terms of volatility expansion to the downside, because at that time, we see that the bands were very compressed right here, is we would actually need to see this next low over here breached as well. So we actually had a zone of kind of interest down here. As long as Bitcoin was closing above this zone of interest, we might break trend, we might deviate trend, but as long as it was closing above the low over here, it wasn't going to get aggressive expansion to the downside. If it did, price would expand down, and then we start looking left to the highs and the lows for support and resistance areas down below and expansion into them. So we went from defining, we have a visual representation of volatility here and combining our trend and our support and resistance, we can gauge when we see these deep compressions like this very easily which side price is the conditions for price to get continuation and expansion aggressively to the upside, and then on the downside dropping the low zone of this box at around 65 150, which some might remember that was like, hey, this is the area that needs to hold. Why? Because we were very compressed on price action. We see closes below there, then we're looking for lower price action, possibly even a retest this, the 62.8 to 58.8, which is a big quarterly back then. We'd see expansion down into that, and then working up through the other time frames and looking at where compression and expansion was, likely would have been a very bad setup for the bulls, very good setup for the bears for further continuation to the downside. Bitcoin chose the upside, kicked off very aggressive expansion across many different time frames to the upside here. And now we're seeing back into because we see compression of the bands here, and we got closes outside of it. As long as we're closing above the upper second, we're continuing that expansion, and we're not looking for a reversal. And as long as we're above that upper first, we're going to continue that trend of expansion. And you see that even closing above it, tapping on it again, closing above it, we can even get retests when the band's passed, and we start seeing like a move like this where we have this nice uptrend, and we have the expansion kind of catching up as the basis kind of catches up with price, reflecting that 20 period of candle movement, that 20 period moving average or simple moving average of candle movement here in terms of price. We see the basis now quickly catching up. That then also causes the bands to catch up and outrun price, which gives us possible reversal points to look at, like at $103,000 up here, until we see price close above, or a reversal point, or an area to pay attention to at the upper first, or the basis, or the lower bands, because now we're seeing continuation of expansion to the bands pinching back together. We have these areas of interest now for volatility levels. And the easiest thing to do is kind of match them up with where we're seeing support and resistance. We see confluence with the basis, right around where this low, this last higher low on the daily was, right? So close below that, we've got a bit of a trend break. We're looking lower, support and resistance within range, right? Down to that 85. If 85 drops, we're looking to that lower first at around 82. And then there's other metrics that we can incorporate into this that involve our trend, our support and resistance as it relates to volatility. Volatility is not a be all end all metric. You take it in confluence with everything else and you define criteria. For instance, on price action for Bitcoin right now, because we are in confirmed mean reversion and we are mean reverting back to the basis band, if we do see a bounce here, for instance, right around here, and we regain the upper first at 96,600, I would be looking for a volatility range between the upper first and upper second, right? And that would be between 96.6 and the upper second there at 103,500. But of course, you have to be aware of the support and resistance zones, because we would need to close above 99,000. Lower term time frame, this is the high that needs to be beat, is at 99,000 as well, which was a retest of the closing highs and then a dump off, right? Well, we would also need to see price trade above 99,860 to then go test the upper second standard deviation, $100,000 and above to 103. If we were to see closures back above there, then we look to the upper third as it's moving, right? Because this would then begin expansion back to the upside. And that's when we need to know, like, okay, is this move going to last? Well, we're coming off of a big expansion. Are we looking at a sustainable upside re-expansion at that point? And how do we gauge that? Or to the downside, if we continue down to the lower first and we lose the basis band at 89,600 or so, and then we lose the lows of this lower side structure on lower term timeframes at 85, then we're looking to go test the lower first. Anywhere below there, we look to support and resistance in the lower term timeframes over here, because it is blue sky breakout territory, and then to the lower second at around 75,600, $75,000 maybe on Wix. And then below there, we would see expansion, right? We would see expansion down into this high side structure that came in just prior to the breakout at $73,000 to the wick high there at the 73,624 before the actual breakout above the prior all-time high at 73,835. Right, but that's where we would see expansion, essentially lower second down into this area and possibly continuation into further areas of support by the lower third here where it is confluent. Obviously, when you're headed down, you work high to low. When you're headed up, you work low to highs. But this is where we need another thing to kind of help us with the bands, right? And that's where we get Bollinger Band width and Bollinger Band percentile. I do not use those anymore. There is a much better metric created by the caretaker called BBWP that kind of combines the two, called Bollinger Band width percentile. Now, it is direction neutral, but it helps us gauge volatility within and outside of the Bollinger Bands. And you can see kind of how this matches up. So we have a period of low volatility right here. Now, this told us that we were coming into a period of compression. You see it reflected on this high side right here is when this started to turn blue, very low volatility. And then later we see that follow through with the pinch in the bands, right? And then price starts to, kind of close back down here. We see a little bit of an uptick in volatility as price hits the upper second of the bands, right? It's even confirmed there's a moving average on here called the 5-period simple moving average. Volatility begins to pick up as price spikes the upper bands. But it doesn't close above, so we don't get continuation. We get that mean reversion. There was an area over here that it needed to close above, and I believe it did not close above. Yeah, it did. No, it did. It was over here. It was this guy here. It didn't close above, if I remember correctly. It's like 73,000 or something along those lines, and basically didn't close above the all-time high anyway. The close came in, I believe, like right at 72,724, and we needed to see what was this high. Yeah, the criteria was it needed to close above this high, and it was 72,777. So 724 didn't close above. We reverse off of that upper second, come back down into a mean reversion, a pinch in the bands. We define the criteria, take out this high, we're expanding to the highs and higher. Take out this low, we're going to have to go and look left for supports and possible expansion to the downside. And when we look at the volatility metrics up here, we can see that we had confirmed expansion. We dip back under, moving average even moves down with it, but then we get that big re-expansion. Well, where did this big re-expansion begin to occur? This big re-expansion started to we saw the flattening out as we kind of regained the basis here. And then we got back above the moving average, which wasn't fully turned down. It was more flat than anything else. We close above the moving average on BBWP up here and above the upper second standard deviation, upper third, and the overhead resistance. We now are in higher high territory with expansion of volatility here. And of course, that picks up. We closed at $75,000. We're in blue skies, go sideways for a little bit, but volatility is still remaining high. Bands are still expanded. We utilize the trending closes above the upper first as a metric for continuing expansion. We get that, and then it starts to close back below the upper second here, revert back to the upper first. We see now we were maxing out volatility, in this case to the upside because we're above the basis here. So that was giving us our direction for volatility expansion as it relates to the bands. And then we get like the retest. Didn't even retest the upper second, but as we're cooling down, we see price maintaining that upper first. We get a retest, and then finally we're mean reverting. So if it was going to go back up, we would need to see Bitcoin close back above the upper first, and then close back above the upper second to then turn this volatility metric back up again, get it back above the moving average, and we're likely looking at this move getting some more volatile price expansion to the upside along with the bands and utilizing the price levels of the bands as checkpoints. So close above the upper second, that volatility is going to increase exponentially. Close above the upper third, which is about 110,500. Then we're going to see it even more volatile to the upside. So we'd see that metric pick up again. And this is how we can gauge we're coming off of an expansion, and we're getting a retest up. Now, granted, we made higher highs, right? But it's likely it's got to hold that. As soon as it puts in a high, we have to be very aware that it could fall straight through back into mean reversion in terms of our bands. And that's because when it spiked these highs again, it was above the upper first, but it was in a mean reversion posture in terms of the BBWP, which is measuring the price volatility relative to the Bollinger Bands here. This is something that I might even do 2 streams on with you, because there's all kinds of different strategies for this. And I did want to kind of pause here and see what your thoughts are so far.
Well, it's very interesting. I'm familiar with Bollinger Bands. I do kind of look at, so, and you explained that the second standard deviation on top and bottom is basically the same as what a standard regular Bollinger Band is. So just taking where we are now, and honestly, I personally, without any of this level of TA, I kind of just felt like we were starting to lose steam when we couldn't quite get to 100K. And so the general perception in the market seemed to be like we were slowing down. And I'm not sure why I settled on the number, but I kind of suggested to myself that I think we need to get back down to test back to 89, which looks like that's actually the mean on the 20 moving average.
Yeah, 89.5. So splitting the difference between 89 and 90, which is a pretty key area on lower term timeframes as well. But this can be quantifiable, even just measuring the percentage gains to the upside in this case, right? The first big expansion was 40%. The second the second leg up was 12%, right? So we're running out of steam, right? And that's easily reflected in our Bollinger Bands here. As our Bollinger Bands are becoming wider and wider set because we're getting further and further away from the basis band or the 20 simple. And at some point you're going to get mean reversion, right? Right now this is shallow mean reversion to a support area, right around the high side of this structure right here, towards the basis band or the 20 simple, right? And we in terms of this setup, what this is telling me, because we are getting the bands pointed down, the upper bands are pointed down, the lower bands are racing up, is that we're likely, it's not confirmed, because if we do break out and start closing back above the upper second, or even dump out all the way past the lower second, we're going to continue this expansion. We'll go back into re-expansion, but how long will it last? Likely not long, unless it gets back up over the moving average for something like BBWP. In this case, we're biased to the upside coming into this compression, that overhead resistances will remain even if it makes a higher high in terms of the band levels, like just above $100,000 at 103. Maybe it spikes through, but if it doesn't close above, it's not going to reignite the expansion back to the upside. And in this case, I would look directly overhead to that 105 to 110 range, somewhere in between the upper second and upper third. Obviously, there's measurement tools that we can use, like Fibonacci's and all kinds of other stuff that I do reference in my videos, but we're going from expansion to compression, so we're likely going to see a little bit of consolidation before things kick off again. How compressed will things get? We'll have to watch, right?
Right, but that also makes it more healthy, because if it just keeps going up and keeps going up, then it's not sustainable, and it's all just that's all just euphoria. Where right now it feels like there's more than just euphoria driving the market. There's legitimate, we have massive institutional adoption coming from all over the place right now, and it's just the tip of the iceberg. So
yes, and we're seeing long-term holders, the long-term holder cohorts. This is not shown on the screen right now, but I have my Crypto Quant account up right on the other screen, right? And long-term holders, people who have been holding about the 6 to 12 month cohort, have been taking profit right at around $98 to $100,000. They started taking, pretty aggressively after the breakout, right? And these are 6 to 12 month holders, and they're just flooding the market, taking profits because it's logical to realize some profits. Many of them, if you were to go check wallets, no, they're not totally selling out, they're taking profits, and there's a lot of people taking profits. And of course, when you're looking 6 to 12 months ago, where was price?
Well,
20, 6 months,
20 to 40K.
Yeah. So 6 months ago, we're in November. So we've got, this candle, not all the way done, but we've got essentially, you just count 1, 2, 3, 4, 5, 6. It was the consolidation. So they're in and around, 60 to maybe even $70,000, depending on where they were accumulating, right? Maybe they were accumulating the whole period, but they started about 6 to 12 months ago. And if you look back 1, 2, 3, 4, 5, 6, they were in before the ETF, right? So the 6 to 12 month cohort realizing profits likely averaged in at about 50K. If you're going to take an average, I have to go look at the metrics, but what are they doing? They're offloading around natural resistance levels overhead that are psychological. 100K is a big round number. So having a big old sell wall there is not abnormal.
Right. With a double up.
Yes.
Yeah. Right.
Yeah.
It makes tons of sense. We got retail coming in. So their exit
liquidity.
Guys,
yep. They've only just started.
Right. And retail's only just started coming in. Institutional investors have really only just started coming in. Like, that last 6 month period or a little bit before that.
So I want to give you a little bit more alpha that we've referenced. I've showed this all the time on my videos, and a lot of people see Bollinger Band sets and people like, we're above the upper second, we're in expansion from all these big, like very popular influencer accounts, right? But it's often that they don't explain like kind of what it means in the grand scheme of things. So this is Bitcoin. This is the index chart. So it's the charted history of Bitcoin, right? From basically it's tradable, it's quantifiable, tradable history. And we see that it started out very, very volatile. In fact, we can look at where it started in terms of volatility, right? Once it was even able to have a look back period that it could measure a reference for the closes on something like a monthly, it started out very, very highly volatile. The dispersion of returns was big because of where the closes and the highs and the lows and the closes and the open average of that dispersion of returns was just getting further and further away from, the original set of data. Then over time, it's been decreasing in volatility, right? And now on the monthly, it's stabilized, where we're getting, essentially, even for the downside moves and the most recent upside move, here we saw expansion to the downside for the first time ever, expansion to the upside that was setting up for this higher low structure that we're in right now. But we didn't get like true expansion. You can always tell on a longer term time frame. We have the lower bands just dropping off the screen as Bitcoin trends above the upper bands. Again, compression through here. You see the lower bands coming in, compression to re-expansion. And this was our 15, 16, and to 17 run. Big expansion. You see the lower bands dropping off the screen. Then we've got our 18 to 2020 compression to re-expansion. And then, of course, we had a little compression into a slight bit of expansion to the downside. This was a character change for Bitcoin, by the way. And now what we can quantify here is typically whenever Bitcoin is running, we did get a little bit of a lower, you could call this a mini bear back here. Let me get the right tools up here. So you can call this like a mini bear. There was no confirmed high, but there was a swing high to swing lower high to swing higher low structure here. So we were still in higher low structure here back in 2011. So it really wasn't a bear market, but we did get some lower highs, but it was all in the context of higher lows. Kind of got a compression as price, when you're referencing the 20 simple was kind of starting and ending in this same spot, getting that compression as it kind of mean reverted. And then this big expansion right above the upper second and third, holds the upper first, goes up for another expansion, and then back into a big compression here, right? And there wasn't really a reference for the quote unquote prior all-time high because it was all just all-time highs. So we had the price to beat was 1242. And then we went into the 2014 kind of higher low, lower high. Once this lower high was locked in September, we knew we were going lower. Bear market's on. We double bottom in 15, coming into 16. We go back into higher low structure, but we get this mean reversion. If you were to calculate the 20 simple moving average, you're getting about your compression right where the bands are showing you that you should have that most compressed state mathematically. And then we start to close, test the highs, and from horizontal support and resistance, we have a high to beat, this bear market lower high. We start to get that expansion towards this bear market lower high. And we are now in a bit of a structural change here, as I grabbed the wrong thing here. Hold on. So we were in a bit of a structural change. So we had the higher low, lower high, lower low. And technically we had a bunch of swing lows in here, right? So we had the two swing lows. We had a couple of swing lows, even a swing lower low, but we got a lower high, we got a higher low close. Technically it was on this is technically not a higher low. It's a higher low close relative to this close, but this never closed the actual low. It was just a swing low to swing high. Many would call this a higher low close though. This was technically just the low close. We needed to see the last lower high on a closing basis. So in this, not a swing high, but a closing high. We saw that as price expanded into it, we were likely going to keep testing it as long as we could put in higher lows. You see how Bitcoin got its expansion up above the upper second, even closing right on that upper third. Held the upper first, or first standard deviation away from the 20 simple. Tested it again, started to close above it. So now we have a trend break on higher lows, right? So when it closed above it and then closes above this high, we have now an uptrend on the monthly in an expansive posture, targeting the next overhead resistance, right? And because we know that as long as we are above the 20 simple and especially above the upper first, we're going to keep testing that resistance. And once we close above it, we will further expand. And that's exactly what we got. By the way, just for reference, remember sell in May and walk away? Well, we had April to May. Yeah, we had April to May. This was by the way, the 2016 election cycle. And then Trump, of course, gets inaugurated in January. We saw, Bitcoin in this nice expansive posture still, even closing right on the upper second. We get a bull candle, a bear candle, a bull candle breakout of the all-time high. And everybody was screaming, well, it's sell in May and walk away. Remember that in April into May. And what did May do? Well, everybody went short in May, and in May, they all got blown the F out. And that was the Trump pump year. This was an outlier. Obviously, sell in May and walk away is a traditional market saying that bled over into crypto, but it's not always going to be that way. So sell in May and walk away is not always going to be that way. And usually it's a fundamental thing. At this point, people are racing to get into Bitcoin. And this was at an institutional level, including retail. We see that we got that expansion, and then we got the mean reversion back to the basis here. We come back down. We don't actually test the prior all-time high. We then get this deepening compression. This was actually pretty easy to pick out because we were going from expansion to compression here. And as Bitcoin was getting into its compression, if it didn't close above the upper second when it spiked the close open all-time high here in 2019, then it was likely going to come back to the basis. And if it made any kind of a lower high in and around the basis relative to this high, well, guess what? We were probably going to come down some more, possibly retest this area, possibly retest the high side of the consolidation to low side of the consolidation or bear market low. And, well, what did we get? We got a test of the high side of these candles over here. I was screaming in 2019. I was screaming about this. Like, we just spiked the upper second standard deviation and rejected in through here. It was also a spike of the close open all-time high. Beware mean reversion, weekly downtrend that fails and continues down. And most people laughed at me in crypto Twitter. And then, well, they had to eat their words when they announced the shutdown, and we had that really beautiful day to the downside. Now, of course, that was an outlier, but it was still a downtrend on the weekly. So we were well aware that lower prices were in the cards. But we see after that, Bitcoin got a really nice deep compression as it came out of this. Well, this was a higher low structure in comparison to the bear market low, but this was still a lower low compared to this low over here. And we had a lower high in here as well. So what we needed to see for the monthly to get its continuation back to even test this lower high, and then of course the all-time high, was we needed to see it work its way back to the basis, regain the upper first. It went into a nice deep compression, but it's funny because as we were coming into this, if we were to reference that extra piece of information, BBWP, if we look here, we were in this nice compression phase telling us that, okay, we are cooling down, but now we're starting to get above the moving average here. We're going to go into this very deep compression to re-expansion very soon. What did we see? Bitcoin closed above the upper first. It then closed around the upper first and began to, in October of 2020, get its first closure above the upper second. Let's measure that real quick, because we see that this was like kind of right after the peak of compression, coming right into the peak of the compression. So October was like, hey, if we close above the upper second, as we're watching price, this is going to be it. We are now going to go test the highs, right? We were right on the close open all-time high, right where we rejected at the upper second prior in 2019, which was, again, the close open all-time high on the monthly. And then now we closed right on it. So from the close to the open, October to November, in the lower term timeframes, like the dailies and weeklies, we were looking for the criteria on the monthly to get closed above and trade above towards the all-time high up here. We were seeing what during this time period? Oh, well, we were seeing confirmed expansion. So we had confirmed the expansion on something like BBWP, as well as we confirmed the closure above the upper second, indicating that we were going to go test the overhead resistances. In this case, we had two areas to pay attention to. And this is where we had this high, which, by the way, was the close open, right? And then we had the all-time high. And if we observe price action here, many were very scared around this time period as well, coming off of this big dump, and we're still in the midst of the funky flu. And, this is just an outlier. It's going to go back to the highs, ignoring the fact that this broke a downtrending structure in higher low fashion. Many did, by the way, ignore that this was a higher low. This was a swing low to swing, a swing higher high relative to this higher high, and a swing higher low to a trend break above this high while setting a higher low on a close. Many ignored it. But we, more importantly, got that expansion confirmation on not just Bollinger Bands, but we got it on BBWP, showing us, price action expansion relative to the bands as well. And then we expanded to the all-time high, closed right on it, and then broke out above it in December of that year. And this was full-on expansion to the upside. So in each checkpoint here in November into December, you can see how we had already confirmed it back in October. So many of us that were looking at this stuff were very, 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 very bullish that we were going to break the all-time high and head higher, even though we needed to see confirmed closures above it on the monthly. But if you look at BBWP, we see that we were just ever increasing that volatility to the upside, telling us that we were going to test the highs and higher, as long as we were closing dailies above those key levels of support and resistance and maintaining closures on the monthly above there. And of course, we got another 3 months of trending above the upper second. We even got a fourth month dipping down below it. And then we lost it, went into a higher low structure here, a little bit of mean reversion. Last higher low was all the way down here at 9,800 on the swing, 10,800 on the close. Very confident back then that we were going to get the higher low and retest the expansion. And we did. That was $69,000 on the dot. We had a range, I believe at the time for myself, about 68 to 70. And we got $69,000, but we failed to close above both the 65 and get re-expansion above the $69,000 on a close to initiate another leg. And instead, we saw it mean revert back to the basis, put in a lower high, confirm that here, and then start to get actual expansion to the downside for the first time ever in Bitcoin's history on a monthly time frame.
Now that
and
means
this was a little scary.
expansion to the downside means that it's gone past or to past the second.
Well, here we had expansion to the upside, and then we start to get the bands coming together, right? So the lower bands are coming up, and the upper bands are kind of going in a big range down and sideways.
Okay. So
and then we lose the basis band. So as soon
Right.
as you lose the basis band, and we started to see the etchings of expansion with this close below the lower first and into the lower second on this compression, we got supported by the lower second for 2 candles right here, right? On closes, we did wick through on the first time. But this was telling us that as long as we were living below the lower first here and below the basis, that we were going to see downside expansion at the time. So that those closes initiated the expansion of the Bollinger Bands to the downside. Now, of course, Bitcoin didn't go for a retest further down, which everybody wanted the 10 to 12K down here where the bands were at the time when the actual low came in. But, it held up in support areas. This was a big old support zone, right? Between, 13,800, almost 13,900, and that 19,800, almost 20K, right? And in this case, it was in the middle of support and resistance right here on the longer term timeframes. And that even had some daily structure over here in the November candle, right? And that, of course, we were looking support and resistance. By the way, for everybody that was calling like this time is different, the whole run up after the crazy cold, I'll call it. And after that, everybody was like, this time is different. This time is different. They weren't wrong, but their thesis was wrong. And that this time is different as this time is the time that it's going to go to $250,000 to $500,000. When in actuality, this time is different in that we were very, very far away from the last higher low. We put in a higher low and double topped, essentially, especially when you look at the closes. We essentially double topped. And then for the first time ever, this time is different. We double topped. We went into our first ever downside expansion. So this time is different, right? And then after that, what else was different? Well, we went in and made a new all-time high before the halving. So this time is different, but it's much different on a longer term time frame versus their 4-year cycle thesis over here. We're in a much bigger structure on longer term time frames. And what we see now is after we had the downside expansion, we found support. We went into a consolidation. We put in the higher low right here. We came up and we put in a higher high, and now we put in a higher low. The interesting part is we got a nice compression here. So as soon as we closed above, we were going into compression. So everybody that was like 10 to 12K, 10 to 12K, technically if Bitcoin fell apart right here below $25,000 and then lost all of this structure over here, well, guess where 12K was, 13K or so. It was right around this lower second. So they technically had a valid target, but it had to meet a whole bunch of criteria. Had to lose the candle structures over here and then lose the low to go test that area. So we had a whole bunch of stuff, including getting back below the lower first, which just so happened to be right where the prior cycle all-time high was. So I was very bearish on this going much further down outside of a retest, even if it did lose that $25,000 level, 24,700 to 900 is what it really was. But in this case, put in a higher low and stayed above the basis band, went in and tested the upper first into this compression phase. So what we see is we saw this period of very low volatility, and then we started to get the moving average crossover for volatility BWP metric. By the way, this is a free indicator. Right when Bitcoin was kind of hanging on to the basis, and as we're going into this compression, this was giving us this was giving us a 2-month head start, by the way, that essentially we were looking for about 2 months ahead when we saw the compression and then the moving average crossover the very next month. We were about 2 months ahead of, especially on this candle right here, when we got the actual confirmed crossover from close to open. that put in the low, that we were biased to the upside. Of course, we also knew we were biased to the upside because we're above the basis band of the 20 simple, but we were moving into max compression, biased to the upside for resolution, pending the actual close above the upper second, and of course breaking the bear market lower high. So what do we have here? We have a few different things that we can look at in terms of, we had the bear market lower high. Then of course we had the higher high structure up here. So when we look at the overhead resistances here, we knew we were coming out of the compression into expansion in December. We knew that because we were in an expansive phase and volatility was picking up to the upside, that we were going to go test the bear market lower high at 48,240. And then on any closures above there, and of course, in the medium term time frame criteria above the January high at 49K, that we were going to see a test of the all-time high on a closing basis to the actual highs there on the $69,000 all-time high. So we knew that we were going in for a test of at least this area here. And hey, go figure, this area was what was tested, right? So we had that big zone to pay attention to. And then essentially what we were looking for is for this area to hold up, put in some higher low structure. We actually saw recompression because we lost the basis was catching up to price, as you know, price kind of reached back for the basis band here in this consolidation. And of course, we are now looking at the potential for Bitcoin to reignite expansion. We're even seeing the etchings of it come into play right here. But if you look at the interplay of the bands and how I was, how did you know? Well, because we're looking at history, we're looking at support, we're looking at trend, support and resistance, and then volatility, and we're finding the confluences. When we get the expansion here, we got front run from the close open of the lower bear market lower high. We know as soon as we maintain that on daily closes, and especially stick above the upper second standard deviation of the monthly on daily closes, that we're more biased to go test it. Once we see it break, we got the close open, it passed. Once we saw it break, during this monthly, we saw that on the close open, Bitcoin lost the upper second. So the criteria was that the upper second was now lined up with the all-time high, or I'm sorry, the bear market lower high. If we close above there, we're going to get further expansion up to the all-time high. So at the time, the criteria was start closing above there on the daily. We're closing above the upper second again on the monthly. And if we close the monthly above there, we're expanding to the all-time high zone and higher. And that's exactly what we saw. Further expansion to the upside. We now have seen another little compression. We haven't even kicked off the expansion just yet. If we start to close the November candle above the upper second, then what are we looking for? Expansion to the upper third and possibly above. That's about 106,000. If Bitcoin continues to push that area, it's probably going to be around about 110. So closes above about 110 would initiate that aggressive expansion to the upside for Bitcoin again. Now, in reality, like, this is the run, but the real run doesn't start until Bitcoin closes above the upper second and upper third. That's when we get the more aggressive expansion. That's when we start to see how we're lining back up in terms of our BBWP. And this might even take through the first part of next year, first quarter of next year, to even get re-expansion.
What you have on screen right now is the BBWP, or that was...
This is BBWP. Like this is a volatility metric. It's just measuring volatility of price within and outside of the bands.
Okay.
So periods of low volatility are where you're going to see compression. Periods of high volatility are where you're seeing expansion. So we haven't seen like really aggressive expansion.
Like a MACD. So if the color one's up, it's expanding to the high side, and then
I wouldn't ever say MACD around Landy. I make fun of people who use the MACD, but it's moving average crossover. Look, it's a volatility metric. It measures volatility essentially away from the basis band, and it's direction neutral, where MACD is directional. This is direction neutral because if you're picking up volatility here and you're below the basis band, which way are you expanding? You're expanding down. Right. If you're picking up volatility here and you're above the basis band, you're expanding up. So the way that things are lining up right now is, as long as Bitcoin is above the basis band And the criteria for expanding that volatility aggressively is closing above the upper second. We start seeing the etchings of it above the upper first on closes. And again, we're talking closes. So we need to see November close above 87,861, right? That would further increase BBWP, right? This will continue to move up another tick, and then we'll see the moving average come down. Where we see them converge, that's extra confirmation in addition to closing above the upper second. So the upper second obviously is the more front runnable, but we do want to see that we get that crossover on expansion and start closing outside of the upper bands here, because otherwise they'll act as resistances and potential reversal points. And that's where maybe we even do another session on volatility, because it is so important. And many people don't know how to use it, even when they do have the metric. Like, oh yeah, it's volatile today. It's not volatile today, or this time frame is really low volatility, and then it increased, and there's no way to predict it. And actually, there is. You just have to lay out the conditions of when that volatility is going to expand, either to the upside or downside, even on lower term timeframes. And in this case, when we have BBWP, that's just that is going to confirm, as long as we're above the upper second, we're above the the basis band above the upper second. Of course, that's directional, that we would be getting further expansion to the upside. But if we don't cross over the moving average, which is just a back tested method, the 5 period has been well tested by Eric Crown from Crown's Crypto Cave, it's Eric Crown Crypto now, but the caretaker was the guy who created the BBWP indicator for him, or he utilized it or something. There was a meeting of the minds there where they he wanted a volatility metric. He's since updated all of that. I asked caretaker if I could use BBWP in my indicator, because it's just way easier than trying to describe things like Bollinger Band percentage and Bollinger Band width, because it's just a lot more complex. People have a very difficult time understanding it. When I say that as long as it's above the basis band, we're in a low volatility environment, we start expanding the upper bands, you're going to see expansion to the upside, right? We can use BBWP to kind of tell us, okay, in this case, as it stands right now, if Bitcoin were to spike the upper third, it's likely going to act as resistance. But if it, in the lower term timeframes, but if it closes above it, we're going to see aggressive expansion kick off. And that's where we'll see BBWP increase. And it's not until we get over the moving average that I'm like, okay, this is the real run. And we might already be like the first, 2 or 3 legs into a weekly on the real run. But that real expansive run is going to either act like this, because this is where people get hung up a lot of the time. So I want to make sure I'm not moving. This is the index. So let's get rid of all the drawings here. And I'll give you an example. We went on this massive run, right? We crossed back over BBWP here. So we peaked BBWP back here is when we hit our peak, which is right around the high, right? It wasn't the actual high at $65,000, but it was right around it. And then you'll see that we get a crossover of BBWP under the moving average here. As soon as we saw that after such a big expansion, what we were looking for at the time was, at least I was looking for at the time, and maybe some others were, I felt like I was the only one looking at this, is that, hey, Bitcoin's likely going to put in a higher low. I did not have any metrics for it heading down here. It had to get through too many support areas in order to meet the criteria of testing, $10,000 to $12,000 here, this higher low. And in this case, I was looking for a higher low somewhere around where it was. There was also confluences for other lower term time frame volatility levels and Fibonacci's and all kinds of fun stuff. Also support and resistance to the left. But once we put in the higher low, I was like, we're in compression. We're back in, this is mean reversion back to the highs, essentially. And we're already in a confirmed cool down state. So we need to be aware of rejections after getting above and setting this low. We need to be aware of rejections around the upper second standard deviation. Because if we don't close above the upper second and the prior all-time high, we're not going to get re-expansion back to the upside. And that's, so because we needed to go through a cool down period. So at minimum, try to stay in higher low structure, which it tried before putting in the lower high here. But essentially, we were already well into a compression phase from a volatility standpoint here, which meant that the upper second was more likely going to act as a reversal point, like any traditional Bollinger Bands. We saw the expansion past, indicating that we were in blue skies. We're in a volatility expansion phase, the run, the fifth wave, whatever the hell you want to call it, right? We were expanding to the upside. We get that mean reversion back down, and then we actually mean revert right back to the highs, spike the upper second in the context of cooling down volatility. And then we saw, of course, when we got the crossover to the downside here is when we actually confirmed right after we went and close open, confirmed this bear market lower high right here into the next month, which was May. This was your sell in May and walk away, by the way, because we had just confirmed a bear market high, right? This was a lower high. So we were looking, first around here from this open in here to this guy. And if this is lost, well, lights out. And we saw that. And of course, we started to see the first ever expansion to the downside of volatility. And that was the risk of starting to close below these lows over here and the lower first on the daily. So I used the monthly as a reference for the daily. Once we started seeing closes below there, it's expansion to the downside for the first time in Bitcoin's history. We look to the lower second in the context of this compression of the bands or the squeeze. And then, we look for checkpoint criteria down to the left here in terms of structure, right? And then on the way back up, compression to expansion, like I just showed. But what we do need to be aware of is we already did our little bit of expansion to the upside here for Bitcoin, right? To see re-expansion, obviously we need to see breakout above the all-time high. We got that, right? We need to see closures above there. What's the next criteria for continued expansion to the upside? Well, it's going to be closing above this upper second here, right? And then what I want to see for the actual run, because Bitcoin does this every time, when it's actually in the run, it doesn't reject around the upper third. It continues past it to actually get the run. So that would be the next checkpoint criteria. So Bitcoin looks good right now at this stage of the month, right? It's the 26th. We've got 4 days to go in the month, right? And it's looking as though as long as it can close above the upper second at, 87,800 or whatever, we're going to get that volatility expansion to the upside, maybe even meet the moving average, the 5-period moving average for BBWP, but we're going to hit that criteria of closing above the all-time high and above the upper second to initiate expansion. We want to see then closures above the upper third when this updates at the end of the month. That's the next criteria to actually go on the run in an expansive manner on a longer term time frame like the monthly. So there's all kinds of fun stuff that we can do that involve this, but you notice what I keep coming back to: trend, support and resistance, and we incorporate volatility. All three are equally important and you need to find the confluences between them to make them effective and to make you effective at analyzing price and setting criteria for where price may go in the future that is going to essentially allow you to make informed decisions and trades, right? So if you can break down charts in this way and you understand trend, you understand support and resistance, and now you understand volatility and how to define criteria, then you can create an effective trading plan. Now, there is one piece that we're going to talk about, and we'll see about volatility because we're going to keep talking about volatility. We'll then incorporate momentum, because the first three keys that I just mentioned, trend, support, and resistance, and volatility, make up momentum. That's what gives us our momentum, right? And then we have different ways of measuring momentum. And I like to use a regular stochastic momentum indicator because I already use RSI, but we're going to talk about both. I don't like to use Stoch RSI for those of you that love Stoch RSI. Why would I use an RSI and a Stoch RSI? Stoch RSI is just measuring the velocity of the RSI itself. If I'm already looking at it, I can see it. And it's much more effective for me to see it and then utilize a regular stoke, which measures close over close price momentum. So the closing price momentum, of course, is up right now on the monthly. And, a little preview of next time. What we'll be talking about is kind of all of these things, right? Keep talking about support, keep talking about support and resistance, and trend and all that stuff. We'll be talking about all of that, plus volatility and how that kind of fits into momentum. And I'm trying to find my stoke that I'm using. And yes, it's all squishy. So we see that we got a momentum shift with these closes, with these last two closes that became higher. We're going to talk a little bit about this. We also have an indicator here. There's free ones. This happens to be a paid one. I'm a big fan of the Crown developers over there, especially because a lot of them have worked with me on mine in terms of allowing me to pilfer their code. But 86,500, almost 86.6 is the criteria to keep momentum pointed to the upside coming into this close. Plus we have, close above the prior high. So that's good. We need to see momentum closed above in terms of the pivot, and we need to see the upper second closed above. Now it's not imperative. We're already broken out above the all-time high, but that's what we want to see for continuation of expansion to the upside, and keep testing higher and higher, and then actually go on a run above $100,000, which would be very, very nice. So that's kind of how I break everything down. It sounds very much like all my videos and what I'm going to be talking about later on Wednesday.
Man, this is all super awesome stuff. It actually does tie together the other things you brought in the first two lessons, and how it, where it lines. Thank you so much for this. Looking forward to the next one. We've been on for an hour and a half now, so we probably should wrap it up. But I do think that this has been awesome stuff. I really can't wait. Thank you so much for doing this. And I have a little bit more of a handle on trying to figure out what direction price seems to be headed in, and what it needs to do to either continue or if it doesn't do that, then we got a trend change, and it probably works both ways. So
and it always starts with trend first, right? Because we have to see where the trend is as it relates to all the other things like support and resistance, volatility, and then of course that's going to help us gauge momentum, and then we have specific tools we can use. Now look, for those that have been in TradFi, for those that have been in crypto and know a little bit about TA, one of the main reasons that I present TA this way for those that are just jumping in is because you need to understand, again, the basics. You need to understand trend, support and resistance, volatility, and momentum for any system, for any of your preferred systems. There has to be that basic understanding. And now I stick with this in my technical analysis videos that I put out Monday, Wednesday, Friday, right? It's all you see me use because it's highly effective. I don't need to, I do know all of the GAN, all of the Elliott wave, and all of the different Wyckoff schematics, and I can throw that up there, but why overcomplicate it, right? That's just showing off at that point. I don't need to use that. Now there's some people who just prefer GAN and using the 50% fibs and the different GAN patterns, right? And that's great, but what does it rely on? It relies on the basics that we just talked about. So, and the same goes for Elliott wave. And Elliott wave obviously is a wave count that incorporates volatility, but what's often missed in Elliott wave is the measurement of volatility and when that volatility is going to kick up. And that's often where Elliott wave traders have a little bit of I got to readjust my whole thesis for this thing because they're not actually measuring volatility. They're expecting volatility in wave format, but they're not actually ready for it.
I'm going to disappear for 2 seconds. I got to go talk to my oil man who's here delivering me some oil.
Good. I'll hold it together here.
Yeah. Stretch, Landy, stretch.
I can stretch. I'm the stretch master. But yeah, so for those that are in the audience, I see we got a couple hundred in one. We've got 70 or 80 in another. We got 228 in one. We've got about 50 or 60 in another, and even 16 in one of them. So for everybody that's here, these are recorded. What I'm going to do is after we wrap this, I'll grab the YouTube videos for DeOrganized. I'll post the first session that we did. which was the trend. It was basically a light candlestick study, because I do expect you to research this stuff yourself, right? It's not that comprehensive. It's basically helping you understand what trend is. And then support and resistance was the second. This is the third in the series, which is focused on volatility. And there's a lot that I could dive into and go like deep down the rabbit hole for like different volatility metrics and how does this one work versus that one and which one is better. And like, that's, I'm describing my system that you see in my videos every Monday, Wednesday, Friday. So that's the big thing. You can go back and rewatch those. I think that they're pretty good in terms of what we covered in the time period that we had to cover them. And we're going to keep expanding on those. So you will need that as a base of information to kind of understand how I break down trend, how I break down support and resistance. And then of course, this one, how I break down volatility. So I'll kind of string those together in a post a little bit later today. And then I'm going to repost my TA from yesterday. And I think if you understand that stuff, you'll be able to understand the biggest points that I try to make in my videos, and you'll be more confident in your analysis. Once you're confident in your analysis, you can form a trading plan. And that's going to be stuff that we're going to get into later, along with how markets work. We're going to be talking about that as well, for those that have shown up a little bit after the fact here as we're coming into the home stretch. So I think I stretched pretty good there, Peace.
That was excellent. You know how I'm not the most friendly guy in the world, so obviously I can just say hi to my oil man and take like 10 minutes to just write out a check and say hi, happy Thanksgiving. Actually, fun story. My oil company has actually been my oil company for like since I was like a teenager. I've been ordering oil from the same family, so it's their son now. The people that used to, so it's a family-owned oil company business. So, not a lot of that stuff still going on these days around these parts. So it's good to support some family-owned businesses. We do the same around here to the extent that we can in California, out here in California. It's a more personal experience. I know these guys. I send them a Christmas card. They know my name when I call. To order oil, and they know my wife. And it's just a better experience. I do want to let Alazar know we do have these our recordings are available on the DeOrganized Media YouTube channel. You can go there. They're in our live feed. So anything that's in our live recordings is in there. This is episode 3, so definitely check out episodes 1 and 2, which of Landy's stuff as well. And Landy will be back here again next Tuesday. Probably closer to this time, I think. Maybe. Well, we'll sort that out.
I think we probably should around this time, because we got a lot more people tuning in the last time. And one of the things that I do want to kind of point out, Alazar, and for others that might be wondering, is like, look, I definitely share this with other people who are well versed. Sometimes they need a little bit of perspective, or it helps to see how others break down price action. I'm always willing to view others. There's a lot of people that I follow that I don't utilize the same systems they do, but we find confluence with each other often. And it's good to have that confluence, or even a counterpoint, right? To go back and look and reassess, like, am I seeing everything the right way? Yes or no, right? Should I factor in something else that I wasn't considering before? So it's always good. And understand that this series is a get started. And honestly, by the end of it, you should be able to break down charts pretty good, right? But it's just the beginning of your journey if you've never done TA before, because you need to practice it. You need to learn a lot more than what I'm presenting here. This is just to get you started, just to kind of whet your appetite to go and do extra research for the things that you might have questions about. And then, of course, I want you guys as an audience to get more involved in asking questions where you feel like you don't have a good grasp or understanding of something, even if it's just related. It's not necessarily what I'm talking about, but related. Like, hey, what is this thing over here? And I can help direct you towards it, because
Right.
I've been doing
And
this
well,
for a long time.
if it's in the live chat too, it's not an immediate disruption to what you're saying, and I can always chime it in. So yeah, we want everyone that's listening whenever, we absolutely want as much engagement in the live chat as possible. If you have questions, don't just make stuff up for no reason. But if you have actual questions, I mean, you're welcome to be goofy and live it up in the live chat too. But
Yeah,
if you have actual questions, don't hold off. Even if you think they sound like stupid questions, there's no such
there's
thing.
no such thing.
There's
Yeah, there you go. Yeah,
So,
no such thing.
Yeah, and definitely, Alizar, keep coming back. This is every Tuesday, and they are recorded. So if you do miss it live, you can always watch back.
Yep, absolutely. And of course,
go ahead.
I will. I would encourage even other traders to come in, because other traders might be able to help you in the chat as well. Describing things. And I interact with other traders all the time. I still go back and advise my old firm, right? Like, so they're just a whole bunch of traders, a bunch of FINRA guys sitting around doing trades, right? And providing liquidity to markets, and advising. They have a whole arm where they're advising and doing actual like financial advice and stuff like that outside of the actual trading firm side. So arm. And they even do training for FINRA and stuff, which is awesome, that I help out in every once in a while. So, other traders that come in that have experience can also help in the chats and help you maybe understand things or give you a different perspective. One of the things that I do want to do, though, is keep it focused on the things that I'm describing, because I think that will naturally help you progress in your learning to relate what I'm talking about to a system you might be studying, like Elliott Wave, like GAN, like the schematic systems. And then there's I'm not afraid to debunk, and there's a lot of things to debunk in the trading sphere, especially crypto Twitter or crypto X, where you have traders that have formulated these systems that maybe are built upon bullshit because it helps to attract an audience. You'll often notice that Landy, no matter what, is very even keeled about direction. And I will always give you the upside and the downside areas of interest. And that's something that you will also, as you learn to do TA, need to incorporate into, and is very important to incorporate into trading plans as we start getting into forming a trading plan around your TA. So, yeah, I want to thank you, Peace. It's honestly a pleasure to be talking about this kind of stuff again for me. It's been a long time since I've done this. And I want to sincerely thank you, Bitcoin DB Live, DeOrganized, and everyone else that makes this happen, for giving me the platform to start talking about this stuff again.
It's win-win, brother. I love having it. I love having you on our platform. You give us a little bit of an air of credibility. So thank you. I really do appreciate having you on it. I love it. We'll keep doing it. Always welcome. Always a pleasure. What do you got going on later today? Anything people should be tuning into today or tomorrow?
I mean, I'm probably today. I'm probably going to be jumping from space to space. I might visit the crew over there on ATC if there is time. And they do some new stuff, right? And they've had some guests that are in the. I don't know when they're going to have some of the different political guests back, but they often have guests from different projects, much like I do on some of my shows. But they often dive into topics like this, and I've been going over there and just contributing some TA stuff and my thoughts on what's happening in the markets, based on my experience. So I might be joining them. That's I think 2:30 p.m. Pacific Standard Time, 5:30 Eastern.
So in just under 3 hours, maybe.
Yeah. But I'm going to be space hopping until then today. And then tomorrow.
Do you have your own show coming on soon?
Well, today's Tuesday. I did my show on Monday. I
It's
don't
just
really
Mondays
have
now,
it.
like your regular show is just Mondays. Well,
Just
you do
Mondays.
Fridays too sometimes now.
Fridays with the wonderful Shiflet behind the Honey Badger account. I obviously jump up under the Moist Sock account these days. So we have the Honey Badger and Moist Sock, both stacks meme coins. And yeah, he's freaking brilliant, man. Like he knows his shit when it comes to markets and
Shift.
Bitcoin and liquidity cycles. He knows his Shiflet. Um, yeah,
Say shift.
he's he's
We got to get a Shiflet show. He
yeah,
knows his
right. He knows his Shiflet. Yeah, he's been a lot of fun to talk to, and obviously, there's so many of you that I have a great time talking to, and that know a lot about this stuff as well. Um, and it's been a pleasure. So, like, I enjoy hanging out in the Stacks community. Obviously, I've been at nighttime. Some of you might notice that I've been visiting the night show with Nobu and Empress. That's a pretty fun show. There's David, one of the bigger accounts that comes through, has been pretty influential in the crypto sphere. I think he's probably sitting at like 700 or 800,000. He's been a contributor on Fox and like all kinds of stuff, but he brings a really good perspective as an old school Bitcoiner. And then they often get a bunch of degens from around the various ecosystems, mostly Solana. But yeah, they have some fun up there, and they're not they don't gatekeep the stage either. So it's been fun to go over and hang out with them.
Nice. What time are they on? You know about?
Oh gosh, I don't even know. I just jump in whenever I see them. They've usually been live for a couple hours.
What's it called again?
It's called The Night Show. They're a lot of fun over there. I'd have to actually ask Empress what time they actually start, because I just jump in after my son goes to bed, and I try to hang out and either listen or I'll jump on stage.
Since I've stopped playing music with any kind of regularity, I'm in bed by like 9 p.m. Like it's just but I'm waking up at 4, so it's still even then I'm getting like 7 hours sleep. That's kind of a lot. So
I don't sleep.
No, you don't.
Landy's always up.
I saw you on the Stacks Australia show last week. I was like, geez, it's like 2:00 in the morning for him. Is he awake?
Yeah.
Is
With Gordon? Yeah. That was a lot of fun because I didn't realize that it was Gordon behind that account. So that was fun to find out as I was shouting him out down in the listeners. And he was like, yeah, I'm right here. It's me.
Now I guess because of the time changes and stuff, they're on at like 4:30 a.m. East Coast time. So I'll probably just catch the tail end going forward. But for a while they were starting at 5:30 and 5:30 my time. So I would just like be able to chime in, like just join and sit there, listen and get my coffee ready for the day, work on setting up the morning show. So that's always a good time. But I don't expect to see you there regularly.
Yeah, no, that's going to be a one-off. I am trying to set something up with him and the one of the bigger accounts. I forget the name of it now, and I subscribe to him too. My brain is operating. But running his YouTube channel and kind of talking about stacks, I'm assuming is what we would be talking about. But now I can't think of the actual name. Boy, oh boy, this is a real good look, right? I think he's got like 100,000 or more YouTube followers.
It's our age. Well, don't say the name now. Don't say it now. No. Don't say it.
No, not yet. People, I think people know who it is. Oh, yes. Okay. I know who it is. I'm just going to say the first name. If you know Alex, not the Alex from GOAT, by the way. Sorry. Different Alex.
That's too bad. That whole situation. But
yes. And not Alex, the exchange. Oh, I had to cough after that one. Sorry. Alex exchange goers. I didn't mean to cough. That was not planned. But yeah, no, they're doing their search campaign over there. I know that there's a bit of a competition going on that everybody's been posting about, but nope, this is a different Alex. This is Alex, a YouTuber. So, and I've been subscribed to them for a long time. I'm like, oh, sure, I'd love to talk to you guys, but we'll see when that actually occurs. But for the rest of today, you'll probably see me floating around from event to event until ATC comes on. We'll see if I have time to jump in there. I do have some things to do. Had a lot of personal stuff going on lately. Everything's good for those that have been asking me in DMs. Just sometimes you got to handle personal shit. Sometimes you got to pay the oil guy.
Yeah, sometimes you got to pay the oil guy. We're getting some new
No
couches.
Diddy, by the way. No Diddy.
Yeah, not that kind of oil.
He is an oil guy after all.
That's actually the first time I heard that today, which is strange because I did an 1.5-hour show with Mike Jagdeo. So I can't believe we got through a whole show without him saying that. I don't think he said it once. So, but I still heard it. He passed it off to you.
Yeah, apparently.
Yeah, man. It's I'm getting a couple new couches, so I gotta roll up a rug and put a new rug down and move some furniture out for the couches to come tomorrow so that we have nice, fresh new couches for my kids to all fuck up on Thursday when they come over for Thanksgiving.
Nice and fresh. I see the shill in there. Fresh. Yeah.
New couches.
$ fresh on Stacks on Velar and on the Stacks Network. So well, peace. I appreciate you, buddy. We're gonna bounce out of here, everybody.
You have a great day, Landy. Thank you, everyone, for tuning in. We are DeOrganized Media. Catch us on the morning show Monday through Friday, and always trying to bring you relevant and interesting content for our ecosystem. Thank you for tuning in. Again, DeOrganized Media on Bitcoin Live, decentralized broadcasting. Y'all have a blessed day. Peace out.